All right, what's up, traders? It's Mark here at DynoTrading. I wanted to provide a follow-up video on yesterday's just bizarre trading day on oil futures. Okay, for you longtime oil traders out there, you know what I'm talking about. We saw oil trade negative. Just think about that in your head, where people are paying you to take oil off their hands, right? And this this chart right here is an oil futures chart on the June contract, because today was the official rollover date. And just take a look at this, guys. All right, how crazy is this chart? Okay, so this is the June contract of oil, and for those of you guys that were fortunate enough to be up very early in the morning, this is 2 o'clock in the morning, you can see that the dyno bars turned red, right? 2 o'clock in the morning. And it just stayed red for a 50% plunge from like 20 bucks to 10 bucks, right? You didn't get a single green bar at all. Later in the session, you had a giant green spike and a massive red sell-off, and the market kind of stayed quiet for a little bit, right? Until right after lunchtime, right? Where it once again cratered, absolutely fucking cratered another 50% right after lunch. So listen, guys, for those of you that trade other instruments, okay, stocks, forex, even other futures instruments, you have to really take stock of how insane this move is. This is the equivalent of whatever market you trade, okay, Facebook, Tesla, or the NASDAQ. It's the equivalent of your market going up or down like 10,000%, 50,000%, right? You'd think the world had gone mad, right? And maybe they have, because if I show you an article that I was reading on Bloomberg today, all right, where they were talking about the oil collapse, I saw something very interesting. Let me highlight this for you here. Can you see this part here? It says traders are in a panic as they try to avoid taking delivery of physical oil. And can you blame them? Right? Why would any trader sign a contract today to buy 1 million barrels at today's prices when they know that 30 days from now, 60 days from now, even 90 days from now, the price of what they just bought today is going to be a shit ton lower than what they paid for it today? Right? So that's why, guys, I'm telling you, these hedge funds, they're stepping into the crude oil futures market, and these hedge funds are shorting the shit out of crude oil futures. There are literally billions of dollars being made right now in the oil futures market. I mean, just think about it. From going from $20 to $6 in just a couple hours, all right? That's not a normal move. So one other thing I wanted to show you guys is I was having a brainstorming session with some of my long-term clients, and we were actually looking at the TBar chart. This is the TBar chart from today on the June contract of oil. And today I was kind of feeling that the T-bars are probably going to slow things down for you. Let me show what I'm talking about. If I layer on the trend lines here, okay, so if you have a directional bias, if you're looking to short the shit out of crude oil, you want to look for the right area to do so. Okay, so I've made things easy for myself, and for all you guys out there, the automated trend lines is going to do that. So I'm going to layer it on right now onto the T-bar chart, and let me show you. Right there you go. Okay, it's going to capture every single pivot point, and it's going to spotlight the exact area right over here that the sell-off may continue. Right? And this was only the second one. I mean, if this was only if you were late to the party, the better one happened in the morning session. Can you see these two pivot points right here? Right? You connect those like that. That was the first one of the morning session. Came in exactly 10:30 a.m. Right? So guys, here's how I'm going to wrap up this video, okay? The two things that I want to make sure you understand, crystal clear, is that when a trend starts, okay, like it did here at 2 o'clock in the morning when my dyno bars turned red. When a trend starts, there is no force on earth that can stop that trend, right? Not your bullshit indicators, not your chat rooms, not your trading courses. This is pure, raw, trend-based price action, right? Nothing in the world can stop that. It's like a rolling snowball. Good luck trying to get in front of a giant snowball, right? I mean, again, I'm going to ask you, how crazy is this chart? But here's the thing. This is also how you make money with trading, okay? When you can get into a trend either before or right at the time that it starts, that's where you're going to make about 98% of all of your trading income forever, right? I mean, today was bizarre on oil futures. Like, this was like a $30,000 day just trading a few contracts potential. I've never seen anything like this before, where you could make $30,000 to $40,000 potential just trading a few contracts. So I don't want you to think that this is the norm, but it might be the norm for at least the next 30 days, right? This is the June contract, which means the June contract is going to expire 4 weeks from now, right? So if I jump back to the TBar chart, if you have a directional bias and you want to join these hedge funds and just short the hell out of oil, then here is probably the most simplistic way to do so, while also keeping your risk very tight and your stops very small for what I consider to be massive rewards. Okay, just huge rewards, huge trading potential today. Anyway, I think that'll do it, guys. Thanks for watching this video. I'm going to try to post another video on how the June contract of oil, which is this one, traded tomorrow. How much do you want to bet that the charts are probably going to look very similar to this and very similar to this? I think for the immediate time being, all of the trading action is in oil futures. Guys, I'm not kidding you when I tell you billions of dollars are being made. And if you ask me personally, I want to try to get my hands on some of those billions, okay? Thanks for watching this video. See you on the next trade.